In Seoul, the average apartment now costs about $1 million. That's 14 years of the average salary. Every single one of it. No food, no rent, no life. 14 years. So when a 24-year-old takes the savings from his mandatory military service and puts them into the stock market at 5 times leverage, he isn't gambling. He's doing the math. This is the story of the country where the stock market became the last elevator up, and of the week the cable snapped. Start with the ladder everyone is supposed to climb. Rung 1, work hard, save. In Korea, that rung is broken by arithmetic. $1 million apartment against an ordinary salary means 20 to 30 years of perfect saving, assuming prices politely stop rising, which they never do. Rung 2, Korea's famous middle step, the jeonse, a system that exists almost nowhere else on Earth. Instead of paying rent, you hand your landlord a giant deposit, half to 80% of the home's entire value. Live rent-free for 2 years and get it all back at the end. For decades, jeonse was the national staircase. Save, deposit, upgrade, eventually buy. Notice what it required: young people borrowing enormous sums and total trust that the landlord gives the money back. Then the staircase betrayed them twice. First by price, as deposits inflated with the homes, then by fraud. In the great jeonse scam wave, more than 38,000 victims were officially recognized. Young tenants whose life savings vanished into landlord schemes, with less than a quarter of the losses recovered. So look at the board honestly. The way a 20-something in Seoul does. Wages too slow. Savings mathematically dead. Jeonse, a trap that ate your friends. Property already gone. Even the state understands the starting point. Korea's conscripts, every young man serves, get a special savings program, with the government matching their deposits month after month, so that a soldier walks out of the army with roughly 20 million won to start his life. It is precisely that money, the most carefully built savings in the country, that a generation now carries to the brokerage app, because what's left is a screen, a trading app. The one ladder still open to anyone with a phone and a one. And in 2025, that ladder started moving faster than anything the country had ever seen. One quick thing, if you want more stories about how money actually moves the world, subscribing is the whole price of admission. Back to Seoul. To understand what happened next, you need to know one strange fact about the Korean stock market. It's basically 2 companies in a very large room. Samsung Electronics and SK Hynix together weigh more than half of the entire KOSPI index. Samsung alone has 4.6 million individual shareholders. Koreans literally call it the people's stock. Add Hynix and you count over 11 million retail holders in a nation of 52 million. Nearly 1 Korean in 3, from students to grandmothers, owns a piece of these 2 firms. And in the AI age, these 2 firms sell the most wanted commodity on Earth: memory. High bandwidth memory, the chips that sit next to NVIDIA's processors and let artificial intelligence actually think. SK Hynix controls about 62% of that market, and its production is sold out through the end of 2026. The result was a chart that looked like a rocket. 2025, the KOSPI gained 76%, the best performing market in the world. First half of 2026, it doubles again, crossing 9,000 points on June 18th. 15 million Koreans are now in the market. Quick concept, because everything that follows depends on it. Leverage. Borrow to invest. At 5 times leverage, 1,001 controls 5,001 of stock. Your gains multiply by 5. So do your losses. It's the difference between riding the elevator and strapping yourself to the outside of it. And here's the beat that makes this story unique. On May 27th, 2026, the Korean state itself opened the throttle. Regulators approved 16 new leveraged ETFs, 2 times daily bets up or down on single stocks, on Samsung, on Hynix. The official logic sounded almost caring. Koreans were already chasing leverage through American products nobody in Seoul could supervise. Better to bring it home where someone's watching. Regulators called it protection. The market called it fresh fuel. $19 billion poured into these products in 8 weeks. 8 weeks. That's how long the fuel waited for a spark. The spark came as 3 headlines in one single week. None of them, on its own, a catastrophe. Headline 1, The Wall Street Journal reports that NVIDIA is ready to backstop some $250 billion of financing for an OpenAI data center project. Think about that structure for a second. It's a bakery lending its customers money to buy its own bread and calling it demand. When the market noticed, an old question resurfaced. How much of this AI boom is revenue, and how much is debt wearing a costume? Headline 2, a Chinese memory maker, CXMT, debuts on the Shanghai Exchange on July 27th, the biggest IPO in Asia this year. The stock up 466% on day 1. China catching up. with infinite money behind it. Headline 3 reports that China's chip machine makers are advancing on the tools everyone said they couldn't build. 3 doubts, 1 week, aimed at the exact same place. Korean memory. Monday, July 28th. Samsung falls 13.4%, one of the worst sessions in its entire history. SK Hynix, minus 14.7%. The KOSPI, minus 10.8% in a single day. And the circuit breakers, the emergency brakes that halt all trading, trigger on Monday and again on Tuesday. That had never happened 2 days in a row, ever. Tuesday digs the hole deeper, another 6% down. At the trough of July 29th, the market sits 40% below its June peak. 1 month earlier, this had been the best performing market on the planet. July ends as the worst single month in the history of the index. Now remember who was strapped to the outside of the elevator. At the peak, the nation's margin debt had hit a record 60 trillion won. 1.2 million accounts were on borrowed money. As prices fell, brokers made the phone call every leveraged investor dreads: add cash now, or we sell you out. Around 360,000 accounts were forcibly liquidated, sold automatically at the very bottom of the hole. Then came Friday, July 31st. The market roared back 17.9%, the single biggest daily gain in KOSPI history. Hynix up 30%, slammed against the daily limit. Crisis averted? Look closer at that Friday. An index recovers. People don't. The forced sellers were already out, their losses locked at the bottom by machines. And the retail investors who survived, on the very day of the historic rebound, they sold a record $5.7 billion of stock, not buying the recovery, escaping through it. Korean media gave the market a nickname that month: the roller coaster. Record highs and record lows, sometimes hours apart. But a roller coaster only feels fun if you're still in your seat when it comes back up. The loop completed itself. The passengers didn't. What does a government do after that? On July 29th, mid-crash, the finance minister stood before Parliament and apologized. The leveraged products had been approved, in his words, without careful consideration. 2 months from launch to apology. That might be a record too. And the fix. Watch it closely, because it's the quiet punchline of this whole story. New listings, frozen. Advertising, banned. And the minimum deposit to trade these products tripled to 30 million won, about $22,000. Read that again. The response to ordinary people losing everything was not to close the casino. It was to raise the entry fee so only the comfortable can afford the tables. The rich keep their roller coaster. The young man with his army savings is now protected by being locked out. Did it work? Here's the detail that answers everything. Since the reform, $1.8 billion of Korean retail money has flowed right back into SOXL, the giant American leveraged ETF, the exact offshore product the May reform was designed to replace. The desperation didn't disappear. It just changed address. Again. And the market? By mid-August, the KOSPI has climbed back towards 6,900, lifted by $2.1 billion of foreign buying, while Korean retail investors, the ones who built this market, swear publicly they're never coming back. The country's margin debt has been cut in half, not by wisdom, but by force. The recovery is real. It just belongs to someone else now. To be fair to the regulators, their starting problem was real. The leverage hunger existed before the ETFs, and no rulebook in Seoul can reach a product listed in New York. That debate is honest, but it's a debate about the casino's doors. Nobody in it is talking about why the line outside keeps forming. Because this was never a story about a nation of gamblers. It's the story of a country that broke its elevator, and then acted surprised when its young people started climbing out the window of the stock market. You can triple the casino's entry fee. You cannot triple a salary staring at $1 million apartment. You can freeze an ETF. You cannot freeze the arithmetic of a 24-year-old who knows precisely that the safe path no longer arrives anywhere. The index will recover. Indexes always do. But somewhere in Seoul tonight, a young man is opening a trading app again, setting the leverage slider again, because the apartment still costs 14 years, and 14 is still bigger than anything else he's been offered. They're not gambling, they're doing the math. Here's my question for you. In your country, does the elevator still work? Tell me below what the honest path to a home looks like where you live. I read everything.